Welcome to another episode of the Apex Perspective podcast. Today I have with me Bethun Bhowmik, who is a serial entrepreneur. He has multiple exits. He's also writing a book and is currently advising some companies as of date. Bethun, can we get started with more about your background and how it led you to what you're doing today?
Absolutely. Hi, Aryan. Nice to be on your podcast, and happy Sunday. It's going to be great Super Bowl evening. On that note, thanks for having me over again. So,
Sure.
to share a bit more about my journey, I have around 12 plus years of experience as a multiple times entrepreneur, launching several startups, and more into the tech side and data driven execution. I have launched five ventures, out of which I have had three exits. Uh, uh, Apart from that, I completed my undergrad from India in 2013. I started my career as a software developer at Oracle.
Mhm.
Then I also had some stint in venture capital with Techstars, where I helped ramp up Techstars community programs across India and South Asia. Worked with a few companies across India, Singapore. Came to US to do my MBA. I got a
Mhm.
full ride to the University of Notre Dame, which is where I did my MBA from.
Mhm.
Then wanted to get some more technical expertise, so did a master's in data science from Harvard,
Mhm.
and have some strategy consulting experience. And currently, I'm at Amazon working with on the AI infrastructure space.
Absolutely. So tell me more about the first couple companies you started. In regard to specifically first, why did you choose to become an entrepreneur for the first company? What was that first company? And tell me more, a little bit more about your entrepreneurial experience.
Oh, absolutely, sure. Well, I think there's a entrepreneurial bug that once that bites you, you can never get rid of the bug. So the way it started the first time was primarily it was uh, pretty much we started designing t-shirts, custom t-shirts, but I built out the platform that would allow you to design your t-shirts full front, full back, the pockets and the sides. And that was, I think, back in 2012. Yeah, so at that time there were very few platforms in India, at least, that were doing that. And
Mhm.
80% of our customer base was college kids for college fests, who would be doing that. It ramped up extremely well, surprisingly well, uh, and I was able to exit it after around 16 months of running it.
Okay.
Interesting, the exit happened to one of the garment manufacturers from whom we are procuring the t-shirts, because for him it made sense that he had no digital presence, and because we are a digital first company, so it would help him in the vertical integration. So I was a just out of
Got
undergrad,
it.
and for me that seemed good. I was happy to have my first exit, and so that's the story of my short-lived 16-month first entrepreneurial stint. But it was a great learning experience. Learned a ton on terms of product management, team management, importance of not
Mhm.
being perfect, but shipping product as well as the technology as soon as possible. So yeah, overall it was a great experience.
And what I was curious about is how did you identify that gap and then how did you validate it that there would be a big need for actually customizing the specifics to the t-shirt you're describing?
It would just happened out of discussing with a few friends back in college.
Okay.
Uh, there were there was a fest back in my college where there were people from all the other different colleges. We had a discussion, and this was just something that's okay. Let's start this and see where it goes. So it was basically what it took was 3 weeks of development. We had the portal up, and then there were I think three colleges. I had friends from three colleges, and I said, "Hey, are you guys willing to be the ambassadors of your colleges and see if you guys can help spread the word around?" And so that's how it spread. And we moved from three colleges, including my college, to around 72 in in a year.
Wow, wow. And so what was and did you, after this company, did you go back into your professional career or did you start another company?
I did start another company, which ended up in a failure. So that's a very interesting story. So I was
Okay.
riding high on my success, and then I was started my second company, which was more into the uh, hyper local delivery of FMCG goods, pretty much like
Mhm.
DoorDash. So the
Yeah.
concept was you would order everything, your groceries, everything you can, and we would deliver it to you within a 4 hour time period.
Okay.
Now, this was back in, again, 2013, where this was pre the sub, the delivery startups that you see nowadays, both in the US and in
Mhm.
India. So I was a bit before my time. And I realized that this kind of ventures requires you to burn a lot of money just to get to a certain level.
Yeah.
The
Yeah.
logistics are not easy, and to
Mhm.
sustain it, it does
Yeah.
require a lot of early burn before you're able to hit your EBITDA or profitability. So that was a challenge.
Mhm.
I did raise
Certainly.
some capital, but I could have done a better job of estimating how much the costs would be, and that came ramping up. And of course, I think location also matters where you choose to
Okay.
start. I think if I would have started that in a city like Delhi or Bangalore, where
Okay.
people are there are more willing to spare like or spend a few dollars,
Disposable income.
yeah, for the convenience of having the groceries delivered, it would be better. So I was
Okay.
the two challenges that I faced was customer acquisition at scale to
Mhm.
justify the unit economics,
Yeah.
and then of course the profitability. And so I was burning money and had to shut that business down in 6 months. Lost whatever money I made in the first venture, lost it all in the second
Wow.
venture. So it was back to zero. But it was a good learning experience overall.
Wow. So location and then funding are the most important learnings you got from that particular venture. So you then led two other
I would say
companies to.
location and the unit economics, figuring out the unit economics
Okay.
of that specific venture.
Understood. And then subsequently, you led on. This might be skipping some time, but you led on two other companies, which you led to two exits. Well, across your experiences as an entrepreneur, you've led successful ideas and led them to exits. Across those times, what is your current process now of really validating ideas and validating opportunities in the market?
I think it's very important to validate ideas fast and do your always understand that your first idea is not the one which you'll be executing. Your ideas will always change. And the way that happens is you take feedback, you build a very quick and dirty MVP, minimum
Mhm.
viable product, go out, get some feedback, understand what are the pain points, and then keep iterating on the process till you find something that where you get a verbal commitment that, okay, I'm willing to be a future paid customer of that.
Mhm.
I think in this age of AI, it's extremely easy and extremely fast to iterate quickly. But how quickly can you get from an idea to a product that customers are willing to take out their credit cards and willing to at least pay you some money, whatever is you think is feasible. So, and then it's all about thinking about technically the scalability front, architecture wise.
Yeah.
So, spending some time to figure out, okay, if this scales to 100,000 users or a million users, what kind of technical architecture should I put so that's easy for me to scale? So that is from a tech lens and product lens, and from a business lens, uh, it's important to find initial customer persona, double down upon it, go deep, and then once
Okay.
you have gone deep, then try to go after other personas rather than trying to go all together.
I love it. I love it. And I think
My
niches is where you can really tackle the problem significantly better than targeting all different kinds of people, because then you can actually address the primary problems that that specific niche is struggling with specifically. So I like that perspective. Now, one thing that I would like to talk more about is really what you focus on today. And one of those focuses are in advising about AI and integrating that into companies, from what I understand. So can you tell me more about your thesis behind AI now? Because there's quite a bit of buzz, you could say, about AI, but there's sometimes I would like to get a bit more of a precise understanding of where we stand with AI and how that can be most useful now.
Well, yeah, I think a lot of work is happening, or buzz, you can say, if you're using that word, on the AI on the front end side of it. But I think
Hmm.
the critical issue that is we are being faced with is the back end part of AI, which is the AI infrastructure, which
Hmm.
is how do we power, like, it's McKinsey projects 2 point something trillion dollars, $2.3 trillion, if I'm correct, of benefits being unlocked from Gen AI, but until 2032. And for that to happen, it would require at least $500 billion of investment into AI infrastructure. Now, if we go one level lower, understand that the grid, on the electricity grid, is being hit from two angles right now. One is the AI data centers,
Okay.
where if you are using, and it's AI data centers are different than the legacy data centers, where primarily if you are storing a photo we have on Dropbox will be using some data center somewhere in the US, or
Hmm.
anywhere else, and that would take some amount of storage.
Okay.
Now, when you run a query on Chat GPT, it would go to a data center in the backend, and the usage would be 10 times of the one of storing your photo as via Dropbox. So
Wow.
AI data centers consume almost 10 times more the energy.
Yeah.
Now, uh, the US peak demand as of 2024 was 33 gigawatts.
Okay.
2030, it's projected to be 166. So that's like a
Wow.
5x jump in terms of energy capacity required. To put into perspective, that's like creating 12 New York cities out of thin air. Imagine, like, completely creating and powering 12 New York cities in the next 5 years. Uh, and there's no answer on how that can be done. There's a lot of things that's being done. So that's why I say it's such a huge challenge.
Right.
Uh, so that's one. Secondly, we have 5 million electric vehicles on the road in the US currently. The Department of Energy projects that number will rise to 33 million. So that would be a 7x jump in EV vehicles,
Hmm.
majorly like commercial fleets, like the trucks,
Hmm.
from Amazon, from Walmart, from FedEx, the commercial delivery trucks, the long haul trucks. So again, that would lead to a lot of power constraints on the grid. So it's a once in a lifetime, in our human lifetime event, where since the dawn of whenever electricity was produced, the growth was very linear. For the first time, it's going to be a hockey stick curve, a J curve, where it's the demand is going to rise exponentially. But how do we cater to the demand is still a question that's been worked on. People are working
That
on
was
it.
going to be my question.
Yeah. So that is something which is a very, if that is not solved in the next 5 years, a lot of the proposed gains that we're expecting from Genia unlocking may or may
Hmm.
not happen.
Wow. So, in regard to that, in this massive energy expenditure and requirements, 5x by I believe it's going to be by 2030, and the increase in energy requirements due to the increasing number of electric vehicles, what are the possible other ramifications associated to that?
Well, think of it this way. I mean, there's three clocks. You need to know that. There's the power clock, or the time to power. The and but by that, what I mean is that there's so many places where a data center has been built, and it's like a shell, just like a warehouse with nothing else, because the utility cannot promise you power until the next 3 years. So, which of course leads to losses from investors and other second degree effects. So when
Okay.
you talk about ramifications, I think it's very important for anyone trying to be in this industry is to understand the three clocks. What is the time to power, the time to get permits, and then of course the time for construction.
Okay.
And the time to power is the longest lead time, because if you go to Northern Virginia and ask Dominion Energy, which is the utility provider, they will say, do not come to us asking for power till end of 2026. They're tapped out completely. Texas is slightly better because ERCOT, which handles the grid out there, is not within the federal purview. So that's
Hmm.
why the time to power is slightly lesser, 12 months to 15 months. But on an
Okay.
average, if you have to start something for data center project or even an EV project, expect a very long lead time. So you have to keep that in mind when trying to start something of projects. From an investor perspective, however, it's a very interesting time, because 5 years ago, I think if you were given two options, option A being a dazzling 60-storied Manhattan tower with marble flooring right in with views of Central Park, that was one option, and the option two was a windowless concrete box or warehouse in Northern Virginia near a egg highway exit. I'm sure you would have chosen option one,
Sure.
right? But right now, I think a lot of people are moving towards option two, because when you look at the 60-story Manhattan tower, like, that tower is struggling with the 20-30% vacancy rate. The tenants are trying to downsize, the rates, NOI rates are rising, and valuation is plummeting. However, the concrete warehouse in Virginia, they are leasing at triple the rate of the tower. And
Yep.
there's like triple A credit tenants like AWS, Meta, Google, trying to sign up 15-20 year leases, and the valuation per square foot is increasing way more than the luxury penthouse. So I think
Wow.
it's an interesting timeline for investors who are trying to invest in real estate, to move into and try to invest in the AI infrastructure,
Hmm.
because I think the returns are going to be much
Hmm.
more higher.
Hmm. I've had the chance to interview a lot of people involved in commercial real estate, specifically those who own industrial real estate, those who own office buildings. Do you think there's going to be an opportunity to repurpose those pieces of real estate to be data centers?
Depends. It's going to be tough. For example, again, the key issue is going to be power. The
Yeah.
average power, for example, for data center would be 20 to 30 megawatts. That's a lot of power. Now, if the power is there, then yes. For example, a lot of abandoned Bitcoin mining farms can be repurposed at data centers, just because when somebody took those farms to power the Bitcoin servers, I'm sure there was some minimum required capacity of at
Hmm.
least, let's say, 5 megawatts. I don't know. I'm just saying. But you cannot just repurpose something that has maybe 1 or 2 megawatts into data center just because it's
Yeah.
not it.
Not enough.
So it's a more often than that, and this is something I delve more into my book that I'm writing on the similar subject, is that it's data center land requires a very specific set of criteria. There's 50 plus criteria that is outlined. I'll tell you some. The gradient slope cannot be more than 5 degrees. The land cannot
Okay.
be sitting on floodplain, 100 or even 500-year floodplain. It cannot be near an airport, because then the particulates from the air can get into the server racks and can damage the server racks. It cannot be close to a human settlement, or houses, because the server
Wow.
creates noises. So of course, if it's near where people are staying, it would be inconvenient for them. So yeah, there's like a lot of things to even identify what kind of land is appropriate for a data center.
Certainly.
uh, so that's why it's a nuanced question when you're asking that.
Right. So if we're looking at 5x usage of energy by 2030, how do you think we're going to meet this demand? I'm sure there's some kind of thesis you may have, especially from the book that you've written and from the perspective you have in the book. What is the thesis behind what the solution could be and what needs to be done to match that demand?
I think a lot of the big players are working towards it. They know that it's a challenge. So by the big players, I mean the hyperscalers, Amazon, Google, Meta,
Mhm.
Microsoft. Uh, a lot of being data centers are built at scale. But I think what would be required is creating access to more power. So
Okay.
I think that investing in power plants would be a great idea. Creating off-grid solutions via renewables, either solar, geothermal, microgrids. They are the next in good investable opportunities,
Mhm.
and people like you and me can also get into them. And I think there would be situations where if you can produce power, the grid will buy the power from you, and then if you put in battery storage, you can play the power arbitrage game, where of course in the daytime it may be cheaper, but if you're trying to sell it in the evening or nighttime when the load is higher, you can sell it for a higher price.
Okay. Does your book go into this a lot, or what does specifically your book go into?
It does go into this. It's all about laying a given overview of the land, lay of the land, the problem at hand, and then, like I said, the three clocks that I mentioned: the time to power, the time to permit, and then the time to build, construct.
Mhm.
What are the three kill switches, which is the power, cooling, and latency for a data center,
Mhm.
and how to navigate that, and then of course how like normal people like you and me basis can get into it. So it has different investment strategies, right from if you have just $10,000 to $100,000 to $1 million to 10 million and 100 million, basis on
Mhm.
different investment sizes. What are the strategies you can leverage to get into this space and create an impact? And then there's a lot more of the technical aspects of it, but it's more
Sure.
focused towards someone who uh, wants to look at this from an investor's perspective and
Yeah.
understand how this is going to be a game changing next few years, at least from an investment perspective and impact perspective.
Excellent. And I think we already covered the demand part of this, right? Getting into investments of power plants and to energy in general. It's going to be it's going to be focusing on demand that's required by 2030. So I think that's going to be really interesting that you're writing a book on this. So what I want to do now is go ahead and shift this conversation to a little bit more about you, Bethune. And the first question I have for you is, what is something about your life that you wish more people knew about?
That's an interesting question. Well, I mean, so my dad is a doctor, and
Mhm.
when I was young, one of the things he told that made an impact on my life is that everybody does something for the family, no matter whether you're poor or wealthy. Everybody tries to do something for the family. What counts is what you try to do for the bigger society. That's
Mhm.
what defines the person. So I think that
Mhm.
played an impact in my life. So during
Mhm.
COVID, I launched a free medicine bank in India, and which became one of the largest medicine banks in my state. Till date, we have helped more than 7,000 people by giving them free medicines. But yeah, that's the one angle which I would want to do more,
Mhm.
given if I have more time, and definitely get into the more of the how I can create impact for people. I come from a medical background, so leveraging that definitely is what I have done in the past, because I had support from my father on that. But overall, what I also do is I help and mentor a lot of startups from
Mhm.
whatever little knowledge I have gathered from my experience, and try to see if I can help them save some time and pitfalls based on my experience.
I know you mentioned early in the podcast that you started your first company in your early 20s, maybe around college age years. Could you describe the kind of person you were around that age?
I mean, I don't know myself what kind of person I was. What I know is that I was more of an action taker. I was
Yeah.
more of the person who would jump into the pool and then figure out how to swim.
Okay.
So
I love that.
so it was like, and I think that helps, because most of the times we trick our brain into thinking, should we do it before taking a risk. Uh,
Exactly.
so once you're in the deep end of the pool, you have no option but to swim. And when you start swimming, generally you find help. You'll find helps in terms of metaphorically, where people would come and try to lend your hand and, okay, like, support you. But I think action definitely triumphs overthinking, I would say.
In what ways do you think you're similar to that person, and maybe in what ways are you different?
Right now,
Yeah,
well, again, there's a very I would say a very famous VC once told me this, that there's two best times to be an entrepreneur. One is when you are young and foolish and you have not seen the world, but you have lots of energy, so you just go and do it. And most often than not, you get good success. That's it when you're in the early 20s, when you're still in the college years. The second time is when you have probably seen everything, have a few years of experience on your belt, whether corporate or other life experiences, and probably that would mean at least like, yeah, you're in the late 30s or whenever. There's no time.
okay,
The timeline is different for everybody. But after you have done everything and you have got the knowledge, then you jump in. So
okay,
there's two ends of the things. I think I'm now in the more of the second. I did the first part, and now I'm in the
sure.
other phase of my life.
Love it. So what I'll do now is go ahead and share a quick perspective regarding fitness and health, and from there we can go ahead and conclude the podcast with your plan for this year or the coming year. The primary perspective I really want to share today is making a health and fitness approach as time efficient as possible. As you know, Bethune, a lot of my viewers are entrepreneurs and executives, so I'd really like to make my advice as, I would say, doable for them. So how can you really make it time efficient is really where you just start with the requirements first. And if you look at PubMed, there's really two primary requirements to, I guess, losing specifically fat and losing weight specifically. It's the movement, and then it's your nutrition or your calorie intake. I'm sure, Bethany, you have some things to say about this too. I know you lost 30 pounds last year, so that's great. But the main thing I would like to say is with regard to those two specific requirements, the one that takes our time is a lot of the time the movement specifically, because traditionally you go to a gym, traditionally you have to commute to a studio and exercise there. But to really restructure that to be as time efficient as possible, you have to focus on an approach that actually is location independent as opposed to location dependent. Because if you focus on movement you can only do in one fixed location, a lot of your schedule has to move around for that one particular specific approach. However, if you do something that's location independent, it can actually adapt to your schedule no matter where you are and what you're doing. So what I'd recommend is leveraging something like step count, because that's something you can do while you're listening to this podcast. You can do that while you're traveling. You can do that while you're taking a business call. Potentially it's when you're brainstorming an idea, you're in the ideation phase of a company, etc. So the idea is really looking at the requirements and restructuring the pathway to meet those requirements in the most time efficient way possible. And that's really what I wanted to provide today in terms of a perspective. And even step counts, what I personally use to lose over 70 pounds and actually keep it off myself. So that's the idea, is really defining the requirements and meeting them in the most time efficient way possible. So with that, what we'll do is go ahead and move the conversation to Bethune's plans for this year or the coming year.
On health?
Not on health, in terms of professionally, or if you want, you can, or anything else you want to include for the podcast.
No, I mean, absolutely. The plus one to what you said, I think the easiest thing is to just get up from your chair and do some few push-ups, or some stretching. Definitely gets the blood running. So plus one to you, and then kudos to you for losing 70 pounds last year. But overall, I think the plan is to just keep doing what I'm doing, and yeah, it's an interesting time you're living in for sure.
Yeah.
Just connect with some good people and see where the opportunities take us.
When is your book getting released?
Over the next 7 days. So I'm planning the book release by mid-Feb.
Mid-Feb, awesome. And where can people learn more about the book and more about you?
Yeah, absolutely. Happy to share a
Where?
link.
Okay.
Happy to share a link with you after once it's published, but it will be published on all the key platforms: KDP, the Kindle, Amazon. It will take me a few more time to record the audiobook, but at least there'll be a paperback, hardback, and the ebook on all the major publishing platforms.
Excellent. And is LinkedIn a good place to keep up with you in general?
Sure, that works.
Excellent. Well, thank you so much for joining the podcast. It was a pleasure to have you on. This was Aryan Mohindra and Bethun Bhowmik. Thank you.